The latest inflation data just came in and it will shock you because Main Street is definitely still feeling the pain of inflation, yet the numbers say otherwise. And Wall Street seems to think that everything is okay on the Main Street. And in fact, the market is reacting in a positive direction on it. So, is this data finally the proof that the stock market is not correlated with the overall market? Well, we will get into all of that, but first, let's dive in to the latest inflation numbers that we are seeing. Of course, the US core PCE inflation numbers are now softening. It says to 2.5, but in reality, it's declined to 2.1% in April from the 2.3% that we've seen in March. The core PCE index also rose to 2.5% in the same period, which is down from the 2.7% reported in March. But it's in line with the estimates. And I think that's the unique aspect of this, right? They all are estimating on everything. And to be honest, at all times, they're generally not the most accurate estimations. But if we look at the overall changes in the PCE, which is the Personal Consumption Expenditures Price Index, I know that's a mouthful here, folks, but in April, it was at 2.1%, which it's been steadily declining for the past 3 months. February 2.6, 2.3, then 2.1. Of course, it rose just slightly from January to February, but it's great to see that this is, in fact, going down because it increased by 210.1 billion percent, 0.8% at a monthly rate in April, according to the estimates. But the disposable income increased as well by 0.8% in line. So personal and disposable income both rising, and personal consumption expenditures increased as well, but not quite to the rate that we generally see here, right? So we see 0.2% raising there on the personal consumption expenditures. And this is a great overlay, right? I really like this chart that they show here to show how things are going in personal savings as a percentage. So we're seeing that start to increase here, which is a positive sign, right? But there's a lot of things to dig in deeper in all of these numbers here because, everybody's been talking about the Trump tariff wars, the trade wars, how everything is becoming more expensive. In fact, we've even gotten companies who are coming out and saying that they are going to be waiting to see in the hiring market and all of these different things. In fact, the job market, which I've covered a few other times on this channel, have been talking about delaying hiring because there is a lot of economic uncertainty. And we even have interest rates being cut all over the globe, but yet the Fed is remaining strong and not cutting interest rates. And Jerome Powell is, generally speaking, usually pretty late to the race when it comes to these interest rates. So let's keep diving into the PCE report and we'll see just where Jerome Powell is sitting when it comes to these interest rate environments, because I think it is pretty interesting. So we are diving in. The personal consumption index increased by 2.1 from years ago. So the month-over-month levels only increased 0.1%. So excluding food and energy, 0.0 or 0.1%. So that means that all in all, it's pretty similar across the board, right? It's not necessarily raising every single month. And so it's in line with the fact sheet consensus forecast and all of that. And inflation rate is slipping now when we're checking from our friends over at CNBC. So the core inflation was just at 0.1% for the month. And it's higher although it was higher on its annual level at 2.5%. So consumer spending slowed sharply over the month. Now, there's a lot of speculation why consumer spending slowed. Look, usually we start to see in the month of April and June consumer spending go up because tax returns start to hit. and everybody has a little bit more disposable income. Now, maybe these tax returns, people are saving them for a rainy day. There's a lot of speculation out there. Maybe people are more worried about their job because the job markets aren't extremely strong. So there's a lot of speculation here. And core inflation also was just at 0.1% for the month. So there's a lot of differences here. But the stock market is reacting in a very positive manner. We hinted at this here at the intro, but the S&P 500 marks its best May in 30 years as Wall Street bets on the tariff relief. Now, we'll go into the full S&P numbers here in a second, but the best May in 30 years, that seems like it's a lot of speculation on everything going forward. We have a lot of uncertainty in this stock market environment, and in fact, in the overall economic environment. So the best month in this specific month that it's had in the past 30 odd some years is quite shocking, because why is that? Well, you can see it in the headlines. Trump took away the tariffs. So the tariff relief, everybody is now optimistic for everything going forward. Every negative thing about the previous or about the stock market was pointed at the overall Trump tariffs policy. Everybody was like, hey, it's the tariffs, it's the tariffs, it's the tariffs. In reality, this is all speculation here, folks, because the NASDAQ dipped from 0.3 after having recovered. The S&P has hovered over the Dow. So markets have navigated a mix of tariff uncertainty and signs of cooling inflation from the Fed's preferred price gauge, despite trade turbulence on all three major indices. Both finished the week and month in the green. So would you look at that? All signs lead to positive headlines here. But the last CPI number, the biggest lie I love to say, is CPI. So we're going to my favorite website that many of you know that I love to show, is Govflation. It's at 2.3%. Look, they're not updating their overall numbers here. They're not doing that. Maybe we need to contact them. But last time the inflation rate was at 2.4. The real CPI was at 10.21. That's changing the basket of goods from 1980. I believe they first changed it in 1982. So you see that was the first change that they made post getting off the gold standard. So the real inflation rate is still at 10.21 here. Or, I mean, if we use a similar basket of goods, and the GDP is contracting by 0.3%. So the overall metrics of what we are seeing is something that is not necessarily positive, yet inflation is coming down. So it makes you think, is this overall data or data set that they are reporting, is there some manipulation there? And I'm always of the belief that the government has a lot of incentives to show you these numbers and a lot of incentives to show you, hey, these things are trending in a positive direction, although they are not necessarily positive on all the Western front. Like we see Jerome Powell holding strong and unwilling to cut interest rates. We're seeing Jerome Powell here when the next rate FOMC meeting is in just over 2 weeks. And we have a 5.4% chance that Jerome Powell is going to cut during this rate cut. And we've talked about it before. In fact, the last live stream I did with you guys was about how Australia cut interest rates. And they were talking about a, quote, jumbo interest cut. So we've got one of the biggest nations in the world talking about a jumbo interest rate cut. And we have Jerome Powell unwilling to do a 0.25% interest rate. And then we've even got a waning dollar. The Dixie, I haven't checked this in a while because I haven't been doing as many live streams with you guys because I've been in Vegas for a conference. But nevertheless, we're seeing the Dixie fall below 99.5, which is not encouraging. Since I started doing these live streams with you guys about 2 months ago, we saw the Dixie get up to nearly 101, just close, didn't quite get there. And now we're at 99.4 which is showing a lot of weakness. Yet, like I said, the past month, the best month ever for the S&P 500, where it was up about 7%, 7.5%. For the entire month of May, 7.5%. That is the best month the S&P 500 has ever had in 30 years. 30 years. That's an incredible feat for something. And the economy is still, somewhat shaky. We have the overall core PCE and the personal income outlays looking like everything is positive, yet everybody is kind of shaky and tentative when it comes to the underlying economic situation. In fact, everybody's citing the Trump trade wars, the uncertainty on tariffs. They're trying to say that the overall economy is not in a positive sign. But when we look at the data, they're telling us it's in a positive sign. But there's something underneath the hood that is showing cracks. We've even got, the likes of Jamie Dimon yelling from the mountaintops that the bond market is showing a lot of cracks. And maybe I'll do a full-fledged video on that tomorrow. But, when you see headlines like this, you are going to panic. Jamie Dimon tells regulators about what will happen when the bond market cracks. It's a little interesting headline here. And it's something that is supposed to put fear into the likes of the overall economy. And Jamie Dimon, he's very connected, right? He's a banker and everything else, CEO of the world's largest bank. We'll get into that maybe tomorrow. I'll do a full video on what everybody's saying about the bond market, because we even got Ray Dalio saying some interesting things about the bond market as well. But all of these factors are showing that there's positive in the overall market. Inflation barely budged in tariffs as President Donald Trump implemented them in the early part of the month and had yet to show up in consumer prices. That's what CNBC is saying. The reality is, is all of these policies, you see the layover effects of them months after the fact. You never see the effects of these during that time that it's happening. The only time you see the effects of this is in the stock market initially, because the stock market is always full of speculation and speculators. So, as the legend all-nighter hider is here, smoke the like Cheech and Chong. Don't forget to hit the subscribe button with the bell notification so you guys know when I'm going live, and you guys can join in the chat with the GOAT. But let's get back to here where everybody is talking about excluding food and energy. I always laugh and chuckle when we see things like this. I mean, why are we going to exclude basically the two necessities of life here? Why are we going to exclude all that? It doesn't make any sense what we're saying whatsoever. Excluding food and energy, the core reading tends to get even greater focus from the Fed policymakers. That should tell you all you need to know. So those readings were still at 0.1% month over month and 2.5% against their respective estimates of 0.1 and 2.6. Central bank officials believe core is a better indicator of longer term trends. Sure it is. I believe it as well. But what I don't believe is excluding food and energy from any reporting relating to inflation. It just does not make any sense whatsoever. But we will be going over the bond market here pretty soon. So be sure to smoke the like. All-nighter hider, I appreciate you joining the chat. Hit that subscribe button. Tell a friend to tell a friend. And I'll catch you guys all tomorrow where we'll break down the bond market.